Welcome. As of 2023, the insurance industry will transition to IFRS 17, which is the new standard to account for insurance liabilities. To capture the existing business, this new framework requires the calculation of a transition balance sheet as of January 1st, 2022. This short video clip explains the three approaches that can be used to create the transition balance sheet. The first approach is the full retrospective approach and has to be applied as a default. The IFRS 17 standard requires that an insurer goes back in time as far as possible and calculate the transition balance sheet using historical data. This approach intends to calculate the current balance sheet position for each policy as if IFRS 17 was in place from inception of the policy. This approach requires very detailed data for the IFRS 17 calculations, and given the rich history of Aegon over a long period of time, reaching back several decades for some policies. Applying this approach can be challenging, for example due to the limited historical data available and other reasons. Aegon has applied the full retrospective approach only to selected and mainly younger policies, predominantly in the UK and some newer businesses in the US. If the full retrospective approach is not possible, the second approach is the modified retrospective approach. This allows for some simplification and does not require all relevant historic data. Aegon has applied this method largely for certain younger individual solutions products in the US. A third and alternative approach to the modified retrospective approach is the fair value approach, which takes a prospective view. The insurance liability is assessed based on a third-party view of its fair value. Aegon has chosen to apply the fair value approach for the majority of its business where the full retrospective approach cannot be applied. Please be reminded that all three approaches might be applied to the same product, but for different years of inception. As a result, the consolidated IFRS 17 transition balance sheet will be a mix of all three transition approaches. However, compared to the current standard, the IFRS 17 transition balance sheet will show a more economic view of the existing business. Thank you for your attention.